Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at the SP 500. Now overall, the S&P had a fairly decent gap down. We gapped down below, or at least on top of monthly support, and we saw immediate failure to the downside. But the problem is that immediate failure came down into yesterday's low and just stopped dead in its tracks, and the sellers just could not keep it going. Now, a lot of times that means that sellers are going to try to get a better price. They don't want to sell away down here because it just doesn't make sense to. The buyers make a breakout attempt up and they fail back down for the sellers to try to come in, which was an unsuccessful attempt. Then we start seeing a turn back up again, and that's an important aspect of the next green arrow, because what do we have? We have a lot of sellers that were waiting for that move to try to drive lower. It fails, and it immediately rockets up to the upside. So with this massive bullish response and a failure from the sellers, we know that sellers, unless they took a small loss when they could, are now stuck in the trade, or they're taking a large loss above that first few candles of the day. And that means that the shorts that we're in are likely going to reverse and try to continue back to the opposite direction for a rally to the upside, maybe even to fill the gap. Most of the markets filled the gap, the S&P didn't, but that's the main objective, to see if they can get up, fill the gap, and really drive that market higher. So a beautiful buying opportunity to get that started. Now, with all of the other markets filling their gaps, we look at the S&P and it's a little bit lackluster. We're seeing a lot of weakness showing up. Bears come in. Likely buyers are going to slap in there just for one more attempt to try to get it up into that gap fill. And that falls apart, right? Really weak buy move, and it closes way inside of itself, even below 50% of its own body, right? I mean, just the entirety of the candle, very weak, and it turns around for a strong bear move lower. Now, I don't necessarily like selling right there, but when we see weak buyers show up, a doji after that, and then a strong bear show up after the buyers have failed to really fill that gap and get it going, all of the other indices have filled the gap and are turning off. Everything is pointing now to the downside. And even though this one hasn't done the objective that the others have, when all of the other ones move, the S&P is not going to have much of a choice but to follow the rest of them. And that drove the market down for a nice selling opportunity, a quick little bounce off monthly support, and then a breakout sell once again for a drive back down to finish the move into now a range formation, still finding a huge amount of support at the prior low of day at 23.67. So a very interesting day of both price action and market psychology, and knowing where the traders are trapped can be useful in basically just shoving their stops right down their throat if they didn't exit where they should have, and you can use that to your advantage. So a phenomenal day overall in the S&P. Good to see at least a little bit of movement come back, but fairly slow nonetheless once again today. Fingers crossed we get a little bit better price action as we go forward. But again, that's going to do it for this one. Hopefully you found it useful, maybe a little bit entertaining, maybe you learned something, and we'll see you next time.